This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Thursday morning, and I'm Prashant. With me, as always, my colleagues Sonia and Nigel. Morning, guys.
Morning.
Hi, good morning. Thursday morning, and yesterday you had a good pullback, right, in late trade. But this morning, once again, global cues are not really supporting us.
You know, it's almost like maybe a third time lucky. I don't know if it'll be third time lucky, but two times we've kind of followed the price pattern. So let's quickly kick it off there in terms of what happened, right? So it was almost a repeat of the price action that we saw on Monday, that we saw yesterday. The Nifty sold off, the day's low was made early on, and then the rest of the day was spent in repair, and the market basically moved up consistently. We actually ended positive. So it was a better outcome as compared to what we had on Monday. Tuesday was a holiday. So 2 days now we've done this. We've woken up to weaker global cues. The market has reacted, and then it's kind of moved up. I'll come back to levels in just a bit. But so for the third day in a row, global cues are also similar. They're weak. You've got the S&P, which was down, the NASDAQ, which was down as well. NASDAQ down a little bit more, 1.15 odd percent. By the way, this is the worst two-day fall for the S&P 500 since April. The S&P 500 in Tuesday's US session broke below the 50-day moving average. And, I mean, setups are not looking all that great. It's possible that the S&P, I mean, if the decline is not arrested, sort of retests, or rather tests for the first time after a long time, the 200-day moving average, which is closer to 4150. That's about 5.5% away from here on the main US index, right? The decline in the US started with AI stocks, which were the big outperformers, but now it's spread to cyclicals as well. So it's a slightly broader kind of pullback that we are seeing. At least it looks like the beginning of one. We'll see. By the way, the US market and the Indian market have been the strongest markets in the world, right? Not just this year. You could look at the performance last year or the year before that. So the question is, if the US goes into a bit of a funk, can the market here also completely overlook, or we'll kind of, pay the price maybe to a lesser degree? We'll see. The other problem is the bond market. So bonds continue to sell off. Yields are up. The 10-year yield went up 6 basis points in the US. It's at a new cycle high of 4.27% now. So this is number one. Number two, as a consequence of this, dollar is strengthening. It's now almost 103.5. So yields up, dollar up. The only silver lining is that oil prices are down. And, they were down yesterday. They're down this morning by 2%. Which means that in the last 3 trading days, oil is down. Some Brent oil prices are down 4%. That is meaningful. That is substantial. So while dollar hurts, yields hurt. On the other hand, the softening that we are seeing in oil perhaps helps at the margin. And that's why I'm saying it perhaps is a bit of a silver lining. Let me just look at the overall levels and how things are looking. So as I said, we respected supports, we bounced and closed above the 40-day exponential moving average, which is 19,360. We ended clean 100 points above that particular level. So that's the first level to defend, right? 19,360 on a closing basis should hold. It has held on Monday and yesterday as well. But for signs of revival and the fact that, for us to say that this short-term correction is behind us, you need to close above almost 19,500. 19,498 is basically the level, which is the 61.8% retracement of the recent fall, which is the recent high to the low that we saw 2 days back. Bank Nifty, though, is a different index. It's looking much weaker as compared to the Nifty. It's trading close to the 20-week moving average, which is 43,875. So that's the first number that you need to kind of watch out for. Below that, you got the 200-day moving average, which is, a couple of percentage points away. That stands at 42,752. So far, we've got no help from the Nifty Bank, even as the Nifty has come up and recovered in the last 2 sessions. So that is the weaker part of the index. We'll see. It's also heartening, I must add, to see that even though the Nifty was doing whatever it was doing, the small cap index yesterday ended up 0.6%. And that has been one of the strongest indices, not just here in India, but around the world. The Indian small cap as an asset class has been extremely strong, and that performance continued with all of this whipsawing that we've seen in the last two sessions. Sonia.
Absolutely. And, I think there are two key reasons that the market globally is a bit under pressure, right? One, of course, is the fact that the FOMC minutes hinted at more rate hikes. And two is the China economic concern. So these are two key reasons why the markets were under pressure globally. And even in the Asian markets this morning, actually, there's quite a bit of, downtick that we're seeing across markets like Hong Kong, etc. So apart from that, the Nifty yesterday still is holding on to the 50-day moving average. It's held on to that 19,400 mark. There was a pullback in late trade. And largely, give and take everything, it's been a pretty range-bound market. So the range has been about 19,400 to 19,800 on the upside. If you look at the data from the FIIs, there was, in fact, good data that came in. Both FIIs and DIIs bought in the cash markets yesterday. So we had about 720 crores of cash buying from FIIs. DIIs bought almost 2,400 crores. So in that context, it was a pretty good day. Now, the earnings season is finally behind us, and a lot of brokerages are coming out with their notes as well. Motilal Oswal put out a note this morning where they said that the earnings season has ended on a very strong footing. In fact, they've raised the FY24 Nifty EPS by 2.5% to 988 rupees, and they have upgraded earnings estimates on many companies, whether it's Tata Motors, JSW Steel, SBI, Kotak Mahindra Bank, and Bharti Airtel. So that's at least one validation to the earnings season coming in from Motilal Oswal, saying that it's been a strong season, and that's perhaps what the market could latch on to and build on to as well. But just purely for today, purely for the morning, could be a bit of a choppy start, considering that we have this cloud of, the FOMC suggesting more rate hikes and some concerns from China as well.
Well, that's right, Sonia. We're bang in the middle of the range, right? Yeah. On the downside, 19,250, and the upside, 19,650. So we're at around 19,450. That's bang in the middle. The problem is that the global picture is still very, very nervous. You can't keep getting very strong data coming out of the United States and very weak data coming out of China. That's what's putting the globe in a bit of a tizzy. And obviously, the Fed rate hikes as well, that's what's playing on minds of investors. Now, how are the FIs? How are they positioned? Well, they're positioned net short. Close on 61% of their positions are on the short side. And on the opposite side, they bought a little bit more puts in comparison to calls. But on the writing side, they wrote an equivalent amount of calls as well as puts. Which brings us to the data point. Yesterday, actually, we ended high and we recovered a goodish bit from the low point of the day. But I'm looking at two in-the-money call options, 19,400 call, 19,450 call odd. The premium out there did come down despite you getting the direction right. Yes, there was that intra-week holiday that we had, but the decay on the premiums was faster than expected. Tell you there is still some writing being seen at those levels. And on terms of the highest open interest, well, you have the 19,300 put as well as the 19,400 put. They have the highest open interest, which brings us to the levels. Now, the 20 DMA, well, that's a resistance, and that's going to be quite a stiff resistance. But in the near term, going by the data that we saw, 19,400 call, 19,450 call, keep in mind, you got the direction right, but yet the premium came down, telling you there is aggressive writing being seen at those levels. So for today, 19,520, that becomes a bit of a resistance zone. But since we have the highest amount of open interest on the put side at around 19,300, well, that becomes the support zone. 19,250 to 19,300, when we've gone out there, we have seen a bit of a bounce. The Nifty Bank as well, that as well is bang in the middle of technical levels. The 50 DMA as well as the 100 DMA, both those two levels should come up for you on the screen. They're close to around 1,000 points apart, but we're trading right in the middle out there. And that's going to be a bit of a swing factor as well. The GIFT Nifty suggesting we pull back a little bit. Today is the weekly expiry as well. And as positioning stands, we don't get past the 19,500 odd mark. So let's see whether or not that buy on dips works out. But I think buying closer to around 19,250 to 19,300 makes risk reward favorable. Today, I think you want to wait in there, wait for a couple of hours and then see how it plays out.
Okay, well, that's the trade setup as we are looking at things this morning. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Jahangir Aziz of JP Morgan will join in and he'll set us up on that front. Our research team will get you CNBC TV 18's list of top 10 stocks for the day at 8:30. We do a fundamental stock check with Anand Tandon will be with us.
All right, let's kickstart the show very quickly. We have a comment, in fact, coming in from Mahesh Nandurkar of Jefferies, who says their coverage includes or rather their coverage excluding metals and oil and gas, reported a 20% year-on-year earnings growth, continuing the strong earnings run of the past 3 years. He says the jump in oil PSU earnings and strong performance from lending financials, autos and pharma were the highlights. He adds domestic companies' margin performance was flat quarter-on-quarter. He says operational commentary stayed positive on the capex trends, but weakness was visible in consumer discretionaries and quick service restaurants.
Okay, so money market views. Parul Mittal Sansi says that the USD INR is likely to see an upward bias on spike in dollar yuan, global risk off on August seasonality and higher global yields. She expects the dollar INR pair to trade between 82.8 to 83.5 next week. Adds US dollar sales by PSU banks may keep a lid. Forex moves will be led by risk sentiment, oil prices and central bank intervention.
All right, and on the bonds, Parul says domestic yields are likely to see some upward pressure post the vegetables-led July CPI data surprise amidst muted core inflation. She expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.25%, with an offering bias seen in the near term. She says global yields, oil prices and domestic food prices would stay the market drivers.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit from now, but let's run through the list then. In our special top 10 segment, we're looking at Kotak Mahindra Bank, RVNL, IRCON, JSPL, Adani Power, JSW Energy, Relige Enterprises, IIFL Securities and Lupin. All of them, their stocks on our radar on the back of positive news flow, while on the flip side, Vodafone Idea will be reacting to negative news flow.